you for joining us on Capital Markets this evening. I'm Temple Ashadi. Investors were upbeat with most instruments trending northwards across the different segments of the market, while analysts attribute the performance to the moderate liquidity level, and several fora held this week on the economic outlook saw calls tightening on the need for the Hello and welcome to Capital Markets. Thank you for joining us. I'm Temple Ashaju. Now, investors were upbeat with most instruments trending northwards across the different segments of the market, while analysts attribute the performance to the moderate level liquidity. Several fora held this week on the economic outlook saw calls heightening on the need for the fiscal and monetary authorities to up their game for economic recovery and growth sustainability in 2017. A major revelation from AfroInvest's Economic and Financial Outlook 2017 tagged Reform or Be Relegated says, and I quote, "The economic and financial market outlook for Nigeria in 2017 will be hinged on the resolve to implement tough but necessary structural reforms. We note that Nigerian economy, which is regarded as the largest in Africa, as well as one of the most viable investment destinations, has been on a slippery slide downhill following the crash in commodity prices in half-year 2014. However, a number of other commodity exporting countries affected by lower commodity prices have since taken tough but necessary steps to boost their economies. The reluctance of Nigeria to impose appropriate policy reforms is perhaps most reflected in the currency market, where a severe liquidity crunch has lingered after the CBN imposed capital control measures on FX transactions and fixed FX rates at 199 naira 10 kobo to a US dollar in 2015, before moving the peg to 305 naira 5 kobo to $1 in 2016. This was against the much-needed reform to adopt a flexible exchange rate policy, allowing for appropriate pricing of the domestic currency, which the CBN adamantly resisted. Adopting a similar set of reforms that we've seen in other countries would be long-term positive for Nigeria in trimming the budget deficit and boosting capital flows, but may be short-term painful to consumers." End of quote. This is just one of such many calls made this week by asset managers, venture capitalists, and operators generally in the Nigerian financial market. But in reaction to those warnings, the monetary policy authorities say there's no going back on the implementation of its monetary policies, as the program is geared toward economic development, attributing the recent economic gains seen thus far in agriculture, manufacturing, and of course other sectors of the economy to the policy implementation. The reaction comes after the central bank's two-day rate-setting meeting on Monday and Tuesday. Now, the NASD OTC has always formed a major part of our program, Capital Markets. On Friday, the management of the over-the-counter held its first session of the year with operators to review activities in 2016 and gave its forward-looking approach for 2017. And Capital Markets this evening will pay attention to the deliberations at the meeting. Now let's take off by looking back at some market stories making the round, and we will be kicking off right now with the Securities and Exchange Commission that issued a statement this week. The Securities and Exchange Commission has restated its commitment to promote the development of commodity exchanges in the country. In a statement, the Director General of the Commission, Mr. Munir Guazo, explains that the Lagos Commodities and Futures Exchange, being midwifed by the Association of Stockbroking Houses of Nigeria, which is also known as ASHON, is one of the markets on its radar. The SEC has also expressed support for the equity investment of the Nigerian Sovereign Investment Authority in the Nigerian Commodity Exchange, an establishment expected to materialize in the next 4 months. And of course, Africa Finance Corporation says it has issued a 3-year $150 million Islamic bond through a private placement. The AFC has become the first African government-backed entity to sell an Islamic bond. According to the chief executive, Mr. Andrew Ali, the company receives a total subscription of $230 million for a sukuk initially planned at $100 million. AFC was set up by African governments and the private sector in 2007 to get investment for infrastructure across the continent. It has since invested more than $4 billion in 26 countries in the continent. Now, Global Trading's agency, Fitch Ratings, has revised the outlook of Nigeria's long-term foreign and local currency issuer default ratings from stable to negative and affirms the IDRs at B+. According to its report released on Wednesday, this reflects the tight forex liquidity and low oil production, which contributed to the country's first recession since 1994. Fitch says it expects a limited economic recovery this year with a growth of 1.5%, well below the 2011 to 2015 annual growth average at 4.8%. And Guinness Nigeria has released its second quarter 2017 results. The country's second largest brewer made a loss before tax of 4.66 billion naira against a profit of 1.65 billion naira for the same period last year. However, the company's revenue increased to 59.49 billion naira against 49.83 billion naira for the period under review. Guinness Nigeria also secures shareholders' approval this week to float a rights issue of 40 billion naira to enable it to meet its cost obligations. With the Guinness story, we go straight to the stock market review. A total turnover of 990.584 million shares worth 18.823 billion naira in 14,917 deals were traded this week by investors on the floor of the exchange. The NSE All-Share Index appreciated by 0.40% to end the week at 26,328.22 as the market capitalization also rose to 9.059 trillion naira. 29 equities recorded price appreciation against